Hi there, my name is Jamie. Welcome to this month's second video under the Quick Market Talk with Expert series. Today, we have renowned financial columnist, author, and inventor of the Guppy Multiple Moving Averages with us. So grab your cup of coffee and listen in as we discuss the latest moves in the Hang Seng Index and Hang Seng Tech Index, as well as the potential impact of upcoming IPOs on the Hong Kong stock market. Hi Daryl. The HSI and HS Tech Index have lingered below the key 20,000 and 4,000 levels for most part of this year, following some weakness from the month of March. Do you have an opinion on them and the key levels that you will be looking out for from here?
Now, the key factor to consider is what we call key levels. The key levels that we see on a chart are often different to what other people, fundamental analysts, believe are the key levels. Let me explain the difference. For many people, the key level on the Hang Seng is 20,000. But when we come to look at a chart, the key level is 22,700 and 24,000. This creates a very small or narrow trading band. In the past, the index has come down and hit that band and then consolidated. When it's fallen below that band, it's used that band as a resistance level. So the area between 22,700 and 24,000 has acted historically as a support and resistance barrier. And we can see that the Hang Seng has reached 22,700 and retreated away from it. Now the support level is at 18,000. It dipped very briefly to 18,000 back here early in 2022, and we moved well below 18,000 in 2022 as well. But now the index has broken this long-term downtrend. It will continue to trade in rally and retreat behavior between support at 18,000 and resistance at 22,700. Before a new uptrend can be established, it must move above 22,700 and also above 24,000. This looks unlikely in the next quarter. So we're anticipating sideways trading patterns to continue. Now, there's always a number of people who want to use the Hang Seng as a proxy for the Shanghai market. So they believe that there is some relationship between the behavior in the Shanghai market and the behavior in the Hang Seng Index. The quick look at the Shanghai Index chart shows that this type of relationship no longer exists, if in fact it ever did. The Shanghai Index chart is very different. First, it's coming off a double bottom formation. We don't see that in the Hang Seng Index. There is a narrow trading band which acts as both support and resistance, not as strongly as it does on the Hang Seng. Currently, unlike the Hang Seng, the Shanghai Index has a strong uptrend developing, and because of the double bottom pattern, there's a high probability it will move towards 4,000 as a target. Strong resistance, what we would call a triple top, at around 3,800. So the behavior of the Shanghai Index is quite different to the behavior of the Hang Seng. Don't confuse the two. Trade what you see on the chart, not what you think may happen in related markets. So when we come to the Hang Seng Tech Index, the behavior is very different from the general index, and that is a warning.
Thanks, Daryl. Let's pause here for me to demonstrate how one can obtain leverage exposure via structured warrants listed on the SGX. To find out about how warrants work, one can visit the website warrants.com.sg, which is Macquarie Warrants' homepage for warrants listed in Singapore. Scroll down to the warrant search function, input your underlying of choice, and hit the submit button to be taken into the list of warrants available over the underlying. The shortcut method of choosing the warrant will be to look out for the fire logo next to the warrant code. This refers to the trending warrants over the underlying, chosen based on the tightest spreads and highest liquidity. Click into the warrant code to be taken into the Live Matrix tool, which tells you where the market and the warrant is trading live. Go to the Historical Performance tab to find out how the warrant has performed over time. And for estimation of how the warrant will perform in the future, you can look for the Warrant Selector tool available under the Warrant Tools drop-down. Click into it and select your underlying of choice once again, and depending on if you were bullish or bearish, you can select the call or put respectively. Assuming we were bearish and thought that the market would fall to the 18,000 level, which Daryl believes is the bottom of the range that the Hang Seng will trade within, you see that there is a 7.4% drop from where the market is today on the 23rd of May, 4:50 p.m. Simply increase the number of weeks to simulate the returns on the warrant that you can be expecting. Increase the number of weeks and you'll see that the percentage gains of the warrants will drop. This is a result of the time decay effect, which sets in based on the holding period. The longer one holds onto the warrant, the more time decay the warrant will suffer. Having said that, even over a 4-week period, which is a lower percentage gain than the third week, one can see that the returns continue to be geared relative to what the market is doing. You can then choose the warrant according to the percentage gains that you're comfortable with, as well as look out for the maximum holding period of the warrants that you have chosen to know the maximum period you can hold on to the warrant for. In this case, at the 7-week mark, if your chosen warrant was V9WW, it will now generate only a 4.2% return relative to the market's 7.4% drop. Holding on to it for 8 weeks will now generate a loss on the warrant. So note that the maximum holding period for this warrant is 7 weeks, and for more geared returns relative to the Hang Seng Index, one should hold on to this warrant only for a maximum of 6 weeks. Gearing also works both ways, in that if your view was wrong, assuming if you were bearish but the market went to the 20,000 level, choosing a put warrant will generate losses, magnified losses of 82% over 6 weeks and 44% over 2 weeks. And with that, I hope I've provided you a better understanding of how the Hang Seng warrants will work given your target level. Daryl, do you have a view on how the Hang Seng Tech Index will perform in the short term?
Again, many people think that the 4,000 level is a key level. But when you look at the chart, you can see strong support at 3,725 and strong resistance at 4,800. Yes, the downtrend has been broken. And we start the downtrend line at this midpoint here because that line connects most of the peak highs. It is the best definition of the downtrend. So what's it going to take? It's going to take a strong rally to move above 4,800 before we can say there's an upside breakout. A move below 3,725 has a downside target at 2,200. And that target is calculated by taking the width of this trading band and projecting it downwards. Of course, we can apply the same technique to the upside, measure the width of the trading band, and calculate how high that will move if there is a breakout. And that gives us an upside target of 5,875. However, there is no indication of a strong breakout pressure in either direction. So we're looking for a continuation of this sideways trading band. And to that extent, the performance of the tech index is similar to the performance of the underlying Hang Seng.
Thanks, Daryl. Again, for our investors' reference, we also have warrants over the Hang Seng Tech Index, as well as over the largest tech companies listed on the Hong Kong Stock Exchange of Alibaba, JD.com, Meituan, Tencent, as well as Xiaomi. So one can again repeat the same process that I've shown you on the warrant selector in order to select the warrant of choice as well as to find out the maximum holding period that they can have on the warrant. And moving on to our final question, Daryl. As certain tech companies have begun preparations for the IPOs of their units, what are your thoughts on how this may affect the Hong Kong market?
We have two major IPOs coming to list, Alibaba and JD.com. So the question is, how is that likely to impact on the performance of other stocks? Now, we can't chart this, but we can look at the impact of large-scale IPOs on other markets. And the first and most important thing is that it sucks liquidity out of the existing market and it is transferred to these new giant listings. However, we can overstate the impact of these IPO listings. Yes, certainly there is a short-term impact, but in the longer term they become just part of the general market trading and longer-term trends will be established. So liquidity is spread more evenly throughout the market, and we won't generally see a major long-term impact from these new IPO listings. Trading an IPO is an art by itself. There's a high probability that these will continue to rise after listing. But we still need to manage our exposure, our risk control, until a strong trending direction is established. The technical analysis of the Hang Seng Index and of the Sub-Tech Index suggests that the market is likely to continue trading in a sideways movement rather than making a strong trend break up or down. And that's irrespective of any impact of IPO listings.
Daryl, any final words for our investors on what to look out for in the coming month?
So what's your choice in this situation? Your choice is to be aware of liquidity. There will be a temporary move of liquid markets away from existing stocks as the IPOs list, but then liquidity will even itself out across the market. If you decide to trade the IPOs, then be aware of liquidity as the primary issue that will tell you whether you can get into a position and also out of a position. Until the next episode, I wish you every trading success.
Thanks, Daryl. Until next time. Thank you for watching our chat today, and do subscribe to our newsletter and follow us on Facebook and Telegram to be notified of our next video. You can find the links to the warrants in this video's description. Have a good day with the markets. Bye-bye.